Have you ever noticed the words minimum due on your credit card statement and thought, I'll just pay that this month? Feels harmless, even convenient. But here's the truth. Paying only the minimum is the fastest way to keep yourself trapped in debt for years, sometimes even decades. Banks designed the minimum payment for one reason, to make sure your balance never dies. The longer your balance exists, the more interest you pay. And the more interest you pay, the more money banks make off of you. Paying the minimum might feel like a smart, manageable choice in the short term, but in reality, it's a trap that silently drains your money over time. Here's how it works. Credit cards usually set the minimum payment at 2 to 3% of your total balance. If you owe $3,000, your minimum payment might be just $60 to $90 a month. Sounds doable, right? The problem is that most of this payment goes toward interest, and very little actually reduces your principal. Over time, this means your debt barely decreases, even though you feel like you're making progress. To put it in perspective, a $3,000 debt at 18% interest could take over 16 years to pay off if you stick to minimum payments. And in that time, you'll pay almost $3,000 in interest, nearly doubling your original debt. That's money that could have gone into savings, investments, or building a secure future. Why do banks love the minimum payment so much? Simple, it's highly profitable for them. Banks are businesses, and their goal isn't to help you become debt-free. It's to make money. When you pay only the minimum, your balance lingers, interest compounds, and the bank keeps earning. The minimum payment is deliberately designed to seem small and manageable, giving you the illusion of control while keeping you trapped. Psychologically, it feels good to make a payment, even if it doesn't move the needle much on your actual debt. But that temporary relief comes at a long-term cost. Most people fall into this trap because they underestimate the power of interest and the time it takes for debt to grow. Many feel cash-strapped and believe that paying the minimum is the only feasible option. Some rely on credit cards for convenience or lifestyle maintenance without realizing the long-term financial impact. Others simply don't understand how long-term debt works. The combination of small, manageable payments and high interest is a perfect storm that keeps millions of people in a cycle of debt they can't escape. The good news is that there is a way out. The rule is simple: pay full or pay fast. Paying off your credit card in full every month is ideal. If that's not possible, pay more than the minimum. Even adding a little extra each month can drastically reduce the time it takes to clear your debt and the total interest you pay. For example, paying just 10 to 20% more than the minimum on a $3,000 balance can cut years off your repayment schedule and save hundreds, if not thousands of dollars in interest. Another effective strategy is to focus on high-interest debt first. If you have multiple credit cards, attack the one with the highest interest rate using what's known as the debt avalanche method. By paying off high-interest balances faster, you reduce the amount of money lost to interest, accelerating your journey to financial freedom. For those struggling to make progress, balance transfers can also help. Some banks offer 0% interest transfers for a limited period, allowing you to pay down the principal without accumulating more interest. But this requires discipline. If you continue to spend on the card, the benefit is lost. Budgeting is another key tool in escaping the minimum payment trap. Track your expenses, cut unnecessary costs, and direct those savings toward your debt. Every extra dollar you pay reduces your principal and the interest you owe. It may require lifestyle adjustments, skipping a few coffee runs, eating out less, or pausing subscription services, but the payoff is significant. By combining budgeting with strategic debt repayment, you regain control over your finances and break the cycle that keeps so many people trapped. Consider the real-life example of Rena. She had $5,000 in credit card debt at 20% interest and was only paying the minimum. It would have taken her 18 years to become debt-free, paying thousands in interest along the way. After learning about the minimum payment trap, she decided to make changes. She paid $300 per month instead of the $100 minimum, focused on the card with the highest interest rate, and reduced discretionary spending. Within just 3 years, Rena was completely debt-free, saving over $6,000 in interest, money she could now invest or use for her future. Her story proves that small, consistent actions can have life-changing results. The psychology behind the minimum payment trap is also worth understanding. It appeals to short-term thinking, The relief of a small payment outweighs the distant pain of long-term interest. The key to overcoming it is awareness and discipline. Treat your debt like a fire that needs to be extinguished as quickly as possible. Each extra payment is fuel for freedom, and every month you delay, interest grows and debt compounds. Recognizing this mental trap is the first step toward breaking it. In conclusion, paying only the minimum on your credit card is a silent financial killer. It keeps you trapped in a cycle of debt, paying far more than you ever imagined, while banks profit from your struggle. The solution is clear. Pay in full whenever possible. Pay more than the minimum, prioritize high-interest debt, and budget wisely. Knowledge is power, and now that you know the truth, you have the tools to take control of your finances. Don't fall for the minimum payment trap. Take action today, and give your future self the financial freedom they deserve. Remember, minimum payment equals maximum loss. Pay full, pay fast, and break free from debt.